pay tax to convert money from pre-tax IRA into post-tax Roth, by getting a valuation that is at a discount because of lack of liquidity, you could actually lower your tax payment by close to 50%.
You're listening to Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupey as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures, from multifamily properties, mobile homes to cryptocurrencies. Do not miss this opportunity to escape traditional assets and finally create wealth without Wall Street. Now your host, Jack.
Hey everybody, welcome to another episode of the Alternative Investor Mastermind. Today is going to be a solo episode, and I'm going to talk a little bit about self-directed retirement accounts. This is a very, very powerful investment strategy, and what I found a lot of people just don't know that much about. So I'm going to go through a number of very beginner things just about what the difference between 401ks, IRAs, Roth IRAs. And then I'm going to talk a little bit about some of the major advantages of self-management. A lot of this applies more to self-employed and business owners, but some of these strategies can also be available to everyone. So first things first, when you're an employee, you're generally able to put $16,000 or $17,000 a year into a 401k plan. That's the most traditional. Usually they're with a large administrator, and you get to choose between various mutual funds, index funds, et cetera, et cetera. They don't give a lot of options for investment. Now, if you're self-employed, you can do a self-directed retirement account, which means you still use a custodian, but it allows you to pick and choose what you invest in. And you can invest in real estate, you can provide loans, or you can have a stock portfolio that you can pick and choose yourself at Fidelity or Schwab, but you can do everything on your own. And generally, when you leave a job, you unlock your 401k and you're allowed to move it wherever you want. Now, the IRAs and the 401ks are generally pre-tax money. So you're not paying tax. It lowers your income tax when you put it in. So if you're at the high tax bracket, it's generally smart to do that. Now, the problem is it's going to be taxed when the money is withdrawn. So when you retire, you're going to have to pay tax on it. And then at some stage, there's a required minimum distribution where you have to start taking money out and you have to start paying tax on it. Now, the other option is a Roth IRA. Roth IRAs do not lower your current income rate. However, there's no tax on the withdrawals. So this is super powerful, especially if you can compound these returns over 10, 20, 30 years, where you could have a multi-million-dollar retirement account and that money is completely tax-free. So where this gets really powerful is if you're a self-employed or you're a business owner, you could put a lot more money into your retirement accounts than that standard 14, 15, 16,000, whatever the minimum is for a 401k. You could potentially put in close to $70,000 per year into these retirement accounts. And that could be a combination of the IRA side, which could lower your taxable income, but you can also contribute significantly more into a Roth IRA. There's a term called the mega Roth IRA. And so it's super powerful. And for high earning professionals, business owners, it's really something I think everyone should be doing. So there's an option called the solo 401k if you have no employees, or a safe harbor plan if you have employees. I just went to a 2-day seminar with one of the prominent tax attorneys that specializes in retirement accounts, John Heyer. He ran a 2-day event here in Puerto Rico. And there's a ton of details around it, but overall, generally the solo 401k is a much better option than an IRA. There's some protections in place, and there's also some taxes that it's exempt from. So in most scenarios, most people are better off rolling an IRA, if they have an old employer IRA, rolling it into a solo 401k plan. Now, unfortunately, if you've already rolled it into a Roth, you cannot roll a Roth into a solo 401k. However, if you have a traditional IRA from an old employer, that's that pre-tax money, that can be rolled into a solo 401k. And you can have a solo 401k with a Roth component as well. So I just said a lot there. It's obviously much better to attend one of the seminars, and then there's plenty of flow charts that can really walk you through it. But I want to talk about the power of compounding. Most people just put that standard $15,000 into a retirement account. But if you can be putting $50,000, $60,000, $70,000 per year into your retirement accounts, especially the Roth, where it can grow and compound tax-free, you can have millions of dollars in your retirement account by the time you're 59 and a half. And you're not stuck doing just traditional stocks and bonds either. From your self-directed retirement account, you can lend money. You can be a private lender. You could also invest in property, and you could invest in real estate syndications. And John mentioned a really, really ninja type of strategy with syndications, especially if you're converting from the IRA side where it's pre-tax into the Roth that's post-taxed. So if you were to invest in a syndication, the moment you're about to convert, and generally it's the moment you invest, you could actually get an appraisal on your investment. And because a syndication does not have the same liquidity as a stock, there can often be a discount applied. So therefore, if you're investing into a syndication and you're going to have to pay tax to convert money from pre-tax IRA into post-tax Roth, by getting a valuation that is at a discount because of lack of liquidity, you could actually lower your tax payment by close to 50%. So super powerful. If there's questions about that, feel free to reach out. The last thing I learned about was about the different scenarios for UBIT. UBIT stands for Unrelated Business Income Tax, and where typically holders of IRAs can run into this is if they're into an investment that has leverage. Retirement accounts are supposed to be for passive investments. They're not supposed to be for active trader businesses. So the ways that UBIT generally happens are you're doing something that's really more of running a business. Say you flip 50 houses a year. If you're doing that to too great of an extent, they could say that's an active business and could be subject to taxes. The other scenario with traditional IRAs is if you have leverage, if you're taking out leverage against real estate. And fortunately, solo 401ks are exempt from that UBIT tax for using leverage or loans to buy real estate. So if you're investing in syndications, whether it's through JCAM or any of the other syndications out there, it's much better to use solo 401k money for investments into these asset classes than to use a traditional IRA. That's about it. That's a quick download. I'm going to keep this episode short. But if you're looking for more resources on the self-directed IRAs, I'd strongly recommend you take a look at John Heyer. I'm going to try to get him on the podcast in the coming weeks. His website is taxreductionlawyer.com. He runs various seminars across country a couple times a year. And much of what I've just described is what my cliff notes from an amazing 2-day event that he just held in San Juan. So if you like what you're hearing, please like and subscribe. YouTube, iTunes, Spotify, or your platform of choice. And please connect with us on all major social media. Thank you. See you in the next episode.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at alternativeinvestormastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.